Welcome, everybody. We're excited to have you today for Skanska's Construction Market Trends webinar. I'm Sarah Vakili, the Senior Director of Business Planning and Strategy, and I have the pleasure of being your moderator today. Again, thank you for joining us. I'd love to hear in the chat where you're from, what markets or industries you work in, so let us know. This webinar is meant to accompany Skanska's quarterly market trends report that covers the supply chain, material pricing, labor changes, and other construction indices. So if you haven't already, please check it out after the webinar. I would love to introduce our guest speakers for today. So let's begin with Rob. Oh, Rob, you're on mute. You're good.
Okay. Good afternoon, everyone. I'm Rob Contando, and I'm a supply chain director here at Skanska. Thanks, everyone, for joining us.
Thanks, Rob. And Chris.
Hi, I'm Chris Gregory, Executive Vice President with Steel Fab. Looking forward to the conversation today. Thanks for having me.
Thanks, Chris. And Sarah.
Good afternoon, good morning, depending on where you are coming from today. Sarah Andreasen, I'm our Director of Sales and Marketing for Conair North America, and really excited for the conversation.
Awesome. Well, thank you all so much for joining us. We have an amazing agenda for today. So first, we're going to have Rob dive into the latest supply chain lead times, pricing, and complexities. And then Chris and Sarah will each give a brief overview of Steel Fab and Conair before we dive into a robust Q&A. If at any point you have questions for our speakers, please, again, add it to the chat. We'll do our best to get to them at the end of our call. We did review many of the questions that you submitted beforehand, so we're going to work that into our content today. We may go a little past the hour to try and address questions, so hang tight. Again, if we don't answer one of your questions, we'll do our best to reach out to you directly. And we will be sharing a full recording of today's material as well as all of the presentation slides that you will see. So you'll get all of that information after today's webinar. Before we dive into the supply chain, I do want to give a quick update on tariffs. So late on Friday, May 30th, President Trump announced that he would increase the existing steel and aluminum tariff rate from 25% to 50% and effective June 4th, which is tomorrow. As of this morning, we have actually not seen anything formal by way of executive order or on the Border Patrol site. But we do feel it's important to just address this as we begin today's webinar. That's what you're all here for. So if you joined our winter webinar in early March, we actually shared a scenario regarding the potential impact of tariffs to a $375 million large healthcare project. At that time, tariffs for steel and aluminum were 25%, and they were going to potentially stack with Canadian and Mexican tariffs. And given the above, we have revised that estimate. So right now we're showing if there is a 50% steel and aluminum tariff on all importing countries, plus a 10% reciprocal tariff on all imports, and a Chinese tariff of 30% for all imports. We believe that this is the best estimate or a reasonable impact on a $375 million project. So it's about $18 to $22 million increase. And again, half of the cost here, this cost increase, is actually on derivative products. So derivative products being those that have parts made of steel and aluminum, because those products are still subject to steel and aluminum tariffs. It's based on the weight within that product. So again, Skanska believes roughly, that the doubling of steel and aluminum tariffs, along with other policy adjustments since March, would impact project costs an additional 7 to 8%. Back in March, we suggested the number was about 4 to 5%. Again, this would vary depending on the type and composition of materials used in a project. But we would like to consider broader economic ramifications of tariffs coupled with other industry issues at play. So, industry-leading indicators such as the AIA Billing Index, along with opinions from economic experts, have suggested slower growth in construction starts and spending. We also know that interest rates remain elevated, and there are some federal policies that are creating a cautionary approach for potential capital projects. And now we have this added layer of tariffs challenging our already elevated construction pricing levels. So with these factors working against capital investments, history would suggest that a lower construction volume may lead to downward pressure on the cost of construction despite the tariffs that we're seeing. Many of our project and project planning teams have actually been reporting an improved bidding climate relative to the past 3 years and the post-pandemic boom. And we think that a lot of this is related to challenges that customers are facing with the pricing of their projects. Again, this is our preliminary opinion based on news that happened on Friday. We do expect a lot of continued movement in tariffs in the literal minutes and weeks and months ahead. But in this transition period, we just want you all to consider the following. Please, continue to monitor movement in tariff policy. And as a team, as owners, contractors, designers, engineers, trades, we will all benefit from open discussion about how to mitigate these tariff risks. That's why we have calls like this. And continue to evaluate specifications for your project and sourcing options. Always review and understand your contract terms relative to tariffs. For example, a new tariff requirement in the middle of an active project might be cause for a claim, and that might be addressed in a force majeure provision. And for those projects that are in planning, we do recommend considering a tariff contingency. That was a question many of you had actually coming into this webinar. And we know that calculating potential tariff impacts are not an exact science, but you can work with Skanska or your contractor to evaluate the potential impact by looking at each trade and material sources. Again, our project planning team has a trade-specific tariff calculator, and we're happy to look at your specific project with you. Of course, you're going to want to continue to evaluate pricing strategies, avoid the temptation as much as possible to push tariff risk down to bidders. Again, we've seen the supply chain adjust quickly to these new policies, offer firm pricing. Everything is fluid, but things are changing every day. You might want to consider establishing unit pricing or index-based pricing for products where the supply chain is suggesting that firm fixed pricing won't reflect future tariff policies. And of course, stay informed and be willing to adapt. We're going to share more recommendations in the follow-up materials, but just wanted to highlight this again. And with that, I am going to turn it over to Rob.
Sarah. So a lot has changed in the last 3 months since our last webinar. In terms of our pricing expectations, things have changed for the better in most categories of materials. We're still digesting the most recent announcement of the steel and aluminum tariffs doubling. We're going to be working with our supply chain partners to assess that impact over the coming weeks. But let's look at our tariff timeline slide to better understand some of the recent changes. So there's really been 4 major significant changes since the last webinar. These are highlighted in that middle column you see on the graphic. So first and foremost, reciprocal tariffs were paused for 90 days. So when these tariffs were originally announced, they ranged from 84% against Chinese goods, down to about 11% for the Democratic Republic of Congo. But tariffs announced for most countries kind of ranged in the 25 to 45% range. So this sent shockwaves across the global markets, causing stock markets to plummet. Commodity futures trading dove, in anticipation of a global recession. So it's a significant announcement. Thankfully, these tariffs were paused for 90 days on April 9th. And this was done in a way to account for leaving time for trade negotiations. But a base tariff of 10% was put in place rather than the country-specific reciprocal tariffs. Second thing is, those reciprocal tariff announcements set off a tariff war with China. This culminated in a 145% tariff against Chinese goods and 125% tariff on U.S. goods being exported to China. These tariffs were de-escalated on May 12th when both sides agreed to a 90-day pause, and the lower tariffs of 30% and 10% were put in place, respectively. And then some more recent changes. Just last week, the U.S. Trade Court ruled that tariffs implemented citing the International Emergency Economic Powers Act were levied illegally. So which tariffs were those? These were the reciprocal tariffs and the fentanyl tariffs that were levied against China, Canada, and Mexico. The very next day, the Federal Appeals Court temporarily paused this lower court ruling. So at least for the short term, those tariffs remain in effect. And then fourth, the most recent announcements just on Friday of the doubling of tariffs of steel and aluminum. So these are set to go in effect tomorrow. And as a result, what we saw in the markets yesterday, the Midwest premium pricing for aluminum jumped by 54%. And in addition, hot rolled coil jumped for $50 a ton between Friday to Monday. So some pretty significant reactions in the marketplace. So again, prior to these most recent announcements, we were seeing tariffs impacts lessening. And this can be seen in the commodities markets. Many of those markets that shot up early when the first round of tariffs were announced are giving back some of those gains as these new tariff policy changes are accounted for. In addition, manufacturers and suppliers are taking action to remain competitive. Many of them are shifting sourcing of materials to minimize the impact of tariffs. And in some cases, tariffs are being partially absorbed by the supply chain, with various levels of various tiers of the supply chain absorbing a portion of those tariffs. And then finally, we're finding that equipment manufacturers that announced large increases or surcharges earlier in the year, they're starting to roll back those increases based on some of these changes. And then the last thing I'll mention is in terms of categories that we share with residential construction, things like lumber and drywall. They're experiencing weak demand right now. This is working to keep pricing in check. The seasonal bump in sales that we typically see for a single family home hasn't materialized yet in the spring. And again, that's helping to keep pricing down in those categories. So what does all this mean for our expectations in terms of escalation of construction materials? If we can flip to the next slide. Thank you. So we revised, as I said, many of our categories downward in terms of pricing expectations. We're still expecting escalation in most materials, but just not to the level that we previously had forecasted. So if we look at a couple of the big changes, so let's look first at wood and lumber products. So additional tariffs are still being considered for Canadian lumber, but as the administration's focused on other trade matters, no action's been taken so far. Also, that weakness that I mentioned, the residential construction business is helping to keep those prices in check. So we revised our outlook on lumber and wood material down to the 2 to 5% range for the year. If we look at structural steel, so steel pricing has been kept in check by softening demand in some sectors. So this is especially true in regions where data center construction is not a significant portion of the market. So we're predicting a 5 to 8% impact in structural steel. If we flip to the next slide, look at a couple of other categories that we've revised. So let's look at metal panels and metal studs. So there was a 22% jump in rolled steel coil pricing earlier this year. As these new tariff policies have been kind of digested by the marketplace, 14% of that 22% has been given back. So it's come back down. And what we saw earlier in the year is the metal stud manufacturers all announced 3 separate price increases of 10% each. And what we found is that the actual increases on average taken by the market so far have been in the 5 to 8% range. So those pricing pressures have come down, and because of some weakening demand in some markets, they just haven't accepted those price increases. And then if we look at drywall, again, many increases announced by the major drywall producers earlier this year, and we found that they just weren't accepted in the marketplace. And we think that weak single-family housing market has a lot to do with that. So actual increases taken so far by the market are in the 3 to 5% range rather than the 20% that was announced by the manufacturers. So all good news for construction budgets. As we mentioned earlier, these forecasts don't include the doubling of the steel and aluminum tariffs that are going into effect tomorrow. We'll continue to closely monitor these categories that rely on these metals. As before, we expect it's going to take some time for global supply chains to react, to make adjustments when they can, and to balance these rising costs with changing demand. So we'll continue to update these things as we go forward. I'll hand it back to you, Sarah.
Wonderful. Thank you so much, Rob. Again, we'll share all of these slides with everybody on the call today. And now I'd love to turn it over to Chris, and he's going to talk to us more about steel fab.
Great. Thank you, Sarah. You don't mind slipping to the next slide, please. So steel fab, we are a 3rd generation family-owned structural steel fabricator. So founded in 1955, we've grown significantly since then. This is our current production footprint across the U.S., 15 plants, about 15 offices as well, fabricating a little over 200,000 tons of steel a year. So puts us up there at the top. The markets we serve it's pretty varied, a little more concentrated these days with not a whole lot of folks building steel office buildings, but manufacturing, distribution, healthcare, a bunch of data centers, really, you name it, higher ed, sports. So it keeps us pretty busy. As Rob said, we have noticed a significant shift in the types of work and the volume of work in those sectors, i.e. data centers being a big one. And where we fit in the overall hierarchy of a project, we most often work for general contractors, sometimes work directly for owners as well, given a certain situation. With that, we can go to the next slide, please. So these are a couple snapshots. There's, of course, been a lot of talk and wondering what the tariffs or how they're going to impact the structural steel market in the U.S. These are a few charts that show the breakdown of U.S. Imports of steel mill by country and by product. And what I think is telling here, you can see the top few countries: Canada, Brazil, Mexico, and South Korea and Vietnam. But really, when the products, if you look at the 6 of the top products, they're all coil plate type products. So in the U.S., there's a lot more import of coil products, and coil makes things like bar grating, HSS, plate. So we have seen the prices for coil products spike quite a bit more compared to the hot rolled structural shapes. So it's been a little bit diluted, like Rob had said, over our overall turnkey price for a project up until last week was probably in the 3 to 4% range, given how much of that volume is concentrated in the structural shapes. But I think we could see that grow here over the next few months. With that, we can go to the next slide. This is a graph really showing price increases by product since the beginning of the year. So you can see, again, with coil there at the top, about a 22% increase tube, or HSS as we call it, that jumped up the biggest from January to today. That was pushing 50%. This actually does not reflect a $100 a ton decrease that was announced last week. So has come down a little bit, but frankly, with the news on Friday, we expect this to probably jump right back up here in the coming weeks. On the low end of things, wide flange, those structural shapes that I mentioned, that has increased the least, only about 8%. It's anyone's guess what's going to happen over the coming weeks and months. I personally feel with the demand at the mills and this recent news that we could probably see that tick up a little bit more as well. And with that, we can go to the next slide. Thank you. And this is, again, that same material price tracker, but really capturing a wider time period. So this really goes back to 2020 pre-COVID days, and we can all see the nice spike that we had there in 2021 through 2023. But really, prices had been flattening, if not falling, most of the last year and beyond. So we saw occasional increases that were rolled back when the market wouldn't really support them. But now, since early this year, we've seen gradual increases. So all in all, the structural steel produced in the U.S. is primarily from recycled content. So sometimes it's difficult to see how a tariff can directly impact a price of structural steel, for example. So that's where I think we're seeing a little bit of action from the mills on maybe making up for some prices that were flat most of last year. Thank you, Sarah.
Awesome. Thanks so much, Chris. And now I'm going to turn it over to Sarah to talk about Conure.
Awesome. Thanks, Sarah. You want to go ahead and advance the next one? That'd be great. So for folks who may not be familiar with Conure, we are a 120-year innovator in the facade solution space. So we really pride ourselves on pioneering architectural solutions that enhance modern design, deliver resilient and distinctive buildings, and really promote sustainability and well-being. We are a business unit of the Arconic Corporation, which is a global manufacturer of aluminum sheet and plate extrusions and architectural products and solutions as well. If you want to do the next one, Sarah, please. So where you might find our products on the facade of a building is really pretty wide ranged. If you start at the left and kind of work counterclockwise, the first that you see there is windows. So these for us are architectural grade windows, primarily used in punched openings on the facade. The next you see there are window wall systems. So these are going to be your floor to ceiling glass systems that are spanning floor span to floor span, and they're structured within the structure of the building themselves. Our curtain wall systems then are really designed to span multiple stories on the exterior of the slab and working down the building. And then our entrance systems, so you'll see these in a variety of different applications, from heavy traffic to light traffic, high thermal solutions, impact rated solutions, but primarily all at the first level of the building. Probably one of our most popular are our storefront framing systems. So those are going to be those framing systems that you'll find kind of from 1 to 3 stories of a building. And then complemented by Conure sunshades that can be used on either storefront or curtain wall. Those are meant to really help improve energy efficiency and maximize daylighting within the building. And then last but not least, Conure balcony and terrace door entrances. So those are really meant for the upper floors of the building to complement punched windows, window wall, curtain wall, and really complete the facade. Next slide, please, Sarah. So how do we go to market? Our route to market is really directly with our customer, who's the glazing contractor. But it's very important for us to keep stakeholders engaged throughout the entire value chain of a project deliverable. So, for us, that starts ideally working with developers, owners directly, then bridging into the design itself and trying to support architects, really bring design to life, really help through value engineering when needed, especially when we're seeing, budgets being strained, and then into obviously the contractor who honestly holds the contract with our customer directly, the glazing contractor. And then next slide, please, Sarah. think is the last one. So just wanted to also give a little bit of background as to, for Conair North America, where we operate. I think this will help a little bit as we get into the panel with questions. We really are a North America company. So if you look at kind of our footprint today, the red dots that you see there are our key manufacturing plants. And almost in all but one of those, we have extrusion presses and finishing capabilities. If you look at the gray dots, these are our customer service centers, so meant for a more regional touch and feel. They also have fabrication capabilities there. All of the locations that you'll see kind of partly black, those are where we have customer operations centers. So those are supporting all of the estimating and order entry for projects that we support. And then, lastly, we're headquartered out of just outside of Atlanta. And so, what you'll see, I think, as we go through here, this will help you kind of get a better picture for some of the challenges that we've had, along with all the tariff impacts that have happened since the beginning of the year. Thanks, Sarah. Thanks, everyone.
Yeah. Thank you so much. So I'm going to have Chris join us back, and we'll dive into some questions. Again, if you have questions, please drop in the chat, and we'll do our best to answer them. We also have some team members monitoring the chat, as you can see, to address questions as well. So Sarah, Chris, first question, a lot of customers, and I can even see it happening right now, are curious about the extent to which their U.S. projects rely on imported steel and aluminum, because those are, of course, now subject to tariff. So how would you assess that currently, and looking ahead, what would you expect to see? Sarah, we'll start with you.
Sure. Yeah, I'll give the classic answer that it sort of depends, right? But it really does depend on the supply chain, at least for your facade system. For us, as I kind of shared, we have a very North American footprint, and through early actions that we took to try to mitigate cross-border transactions that would be impacted by tariff, really our biggest challenge that we have to continually monitor are what's happening with the premiums. So both LME and then the Midwest premium. Those are some of our biggest impacts for Conair North America. We have to watch some of the tariffs in China for hardware in particular, but it's really that metal trading price that can be more impactful to us. But as I say, it depends, depending on the supply chain for the solution that you're going to pick. If it is an offshore system that is going to be, exposed to tariffs offshore, that could be a much broader impact than what we're just seeing with trading prices alone.
Okay. And then, Chris, what about for steel?
Yeah, so for steel, with very rare exception, all of our products are produced in the U.S. Really, the only time that I'm aware of that we see some foreign deals really on the West Coast coming in from Asia. It just doesn't make logistical sense to ship steel from Asia and truck it across the country. The rare exception that I mentioned is specific material grades or sizes that aren't produced in the U.S. So these are the big jumbo sections you may see in a skyscraper. Those we get from Luxembourg, who also produces some of the higher grade that Nucor does as well. But like I said, it's pretty much all domestic. So, what we're advising going forward is we're keeping a close eye on those shapes that may be one of the offshore. We have a project right now where the size is made in the U.S. and we're trying to do a substitution, maybe even reinforce it with some other plates so we don't have to go overseas to buy it, because it's a lead time issue and it's of course a price issue as well.
Right. We have found, and we showed you all a very simplified version of what tariffs are, but tariff schedules are fairly convoluted and again changing every day. Could you perhaps, Sarah, walk us through maybe an example of how importing aluminum into the U.S. would be tariffed depending on the country of origin? And again, she's going to speak to this, but we'll send you some material afterward as well.
Absolutely. So, so for us, I can speak best to us as a North America supplier. So, many of our products that we would be importing or exporting are USMCA eligible. So it's really the Section 232 tariff that impacts us the most. And that's the one that we have to try to mitigate our supply chain, even internally against. But, that's pretty unique to us as a North America manufacturer. Again, if you were to be importing a aluminum facade system from China, you really have to get down into the HTS code to kind of understand that impact, because there could be many other tariffs that are applied to that. You could have, for instance, Section 301 or anti-dumping. So it really does get a bit more complex, and you have to get down into the code. But yeah, you kind of have to be able to map it depending on where it's coming from to understand how that will impact you in the overall scale of cost.
Right. And I think there was a question in the chat about this for USMCA, which is the trade agreement between Canada, Mexico, and the United States. That really depends on the supplier and who's applying for exemptions. So it's not a blanket trade agreement, just for everyone on the call to be aware. It can be product by product, company by company.
Yep. Great point.
Okay, so, Chris, we understand that there are significant Canadian-based steel sources. Can you comment as to what challenges are related to Canada or even Mexico as a steel importer? For example, we've heard stories or we've had discussions about a steel fabricator in Canada may import steel from the U.S. and then fabricate it in Canada, export it back to the U.S., and they're subject to compounding steel tariffs in both directions. This is a true story. And how do you think that maybe even the USMCA that we referred to might protect steel trading between the U.S. and Canada?
Yeah, as far as if it's a true story, I'm not sure. It sounds like a headache doing that. I certainly don't have the time to figure out those logistics, but
yeah,
to me, I haven't heard many instances of that happening. The reason why is, to purchase the steel from a U.S. mill, most of which are located in the Southeast, and then to ship it across the border, deal with, border control and the transloaders, and then get into the fabrication facility and then turn around and send it back to the U.S. That is a tremendous amount of freight and logistics that I think even if you were to apply the tariff cost, the freight cost and the double handling or triple handling outsizes any sort of savings that you would have. So the only instance where I could think of that potentially making sense is if the ultimate destination was located somewhere in the Northeast or somewhere by the border. If you're shipping it 7 states away, just to me, it doesn't make a whole lot of sense.
Right. Another question that we hear often is concerns around domestic capacity currently, right? So a lot of the tariffs are put in place with the premise that it will increase domestic capacity, but what about right now? It takes a long time to get manufacturing up and running, as we all know. Would you, either of you, and Chris, we'll start with you, expect that domestic manufacturers are going to struggle to meet demands as more firms and builders need to source domestically?
I don't believe so. We, back in the COVID days, we saw a pinch point because there's such a rush of orders.
Yep.
Now that a number of those sectors have slowed down, those market types, there's still some, again, use data centers, they're still extremely busy, but the mills as a whole are still operating at 75 to 80% capacity. So there is room to grow should they need it. Really, the only pinch point that we are seeing as far as lead times at the moment is at the wide flange mills. What happened this year, what I had front seat to, was when the tariffs were being discussed earlier in the year, we saw a number of owners kind of rush to place orders and get ahead of the price increases.
Yep.
So that created a surge of order entry, which then stretched out the rolling cycles, which then had a second wave of owners rushing to get the orders in to get their material in time. So now we're seeing the mills busier than I've ever seen them, but I do suspect that it's going to flatten out at the end of the year and kind of come back to more manageable rolling frequency. But that seems to be the only product where we're seeing lead time stretch out a little bit.
Okay. Sarah, do you have anything to add to that around domestic capacity?
Not a huge concern of us for the moment. I do think it's something that we're going to have to watch pretty carefully. Obviously there's an agenda behind these tariffs that are being placed, and a lot of the aluminum smelting capacity that has been idled is not a quick turnaround to get back in place, especially in the U.S. And so, I think that that's a challenge that we'll continue to watch on the horizon. But in the short term, not major concerns around capacity, more so just around what's going to happen with trading price.
Got it. So maybe as a follow-up to that, and I kind of alluded to this in my opening comments, do you have any perhaps like pipeline observations, concerns around projects slipping, certain sectors softening? Maybe what are you seeing from your perspectives? And Sarah, we can start with you.
Sure. Yeah, I think some concerns. There's a lot of uncertainty out there, right? And there haven't been any meaningful changes as well with federal rates. So I think for us, we're definitely starting to see a bit of a softening in the market. More present, I would say, in the last 6 weeks or so. So, another reason why we've got to watch all this tariff activity very closely, but definitely a concern that we're watching pretty close. I think for us, we've seen that more so for sure, even beyond the last 6 weeks in the private sector for sure. A lot more softening there than we have in publicly funded projects. So another key area that we keep an eye on, is what's going to be happening in the different segments and where can we support that. But traditionally this would be a busier season in the fenestration market, and it doesn't appear to be quite as robust as we would normally see at this point. So something we're watching closely.
And Chris, what about you?
Yeah, we've our observations have been both kind of market type based and geographically based. So we have seen a concentration again into data centers, manufacturing, aviation, pharma work, big chip fab stuff.
Yeah,
and it's interesting. Kind of the East Coast seems to be slammed with a lot of that work. Our West Coast counterparts and colleagues don't quite have as flush of a backlog, and those large projects seem to be fewer and further between. So it still seems to be a robust pipeline in those sectors, and in fact, we're starting to see some shifts kind of towards the Rust Belt. Like Rob said, the areas that maybe haven't been data center hotspots are the next hotspots, because the primary ones are getting tapped out with power, permits, regulations, you name it. So we're just following that as it kind of shifts around the country.
Great. As major U.S. fabricators and manufacturers, can you share how Steel Fab and Conair are managing through the risks of tariffs? Are there things, your companies are doing, or you think that the industry is doing to help customers, mitigate financial or schedule risks that tariffs might bring? And again, we'll start with you, Sarah.
Yeah. So we took actions very early on when we heard that there could be, impending tariff changes. And so, for us, it's been all about kind of rediverting our supply chain. So both for billet, we previously had billet contracts that span cross borders. We've been able to work really closely with our partner and billet supplier in effort to kind of redivert that and try to mitigate those impacts. We also, as I mentioned, we were a North America company, so a lot of our internal supply chain was crossing borders every week. And so we've had to do a lot of work to redivert that, set up production capability in different plants so that we can mitigate those type of transactions from tariff. And, I think the other thing is to a key that you mentioned earlier, Sarah. It's really trying to work together with the design teams, with the contractors to understand where can we further mitigate that risk. So that could be alternative product selection. It could be, helping with substitutions, an effort to make sure that we've got the lowest impact, but still meeting design performance requirements and design aesthetic that's desired for the project. So, there are definitely some things that we've been able to do within our internal supply chain, but there's a lot of opportunity that we can have in working together to make sure we can meet design intent while mitigating those impacts as well for the project.
Great. And then Chris?
Yeah, we've had success. It's just a lot of early and frequent communication with owners and CMs. I find that we've been able to better insulate those teams from some of these increases than the hard bid market, because we've showed all our cards, and we anytime we hear of a increase or get an announcement from the mill, we share that, and we also try to come up with plans to get around something that we expect to be coming. So what we've done with great success with some of these owners is and CMs is take a project that we're working on, maybe we haven't ordered the material yet, and take that to our mill partners and package projects together and say, all right, it's not just 1,000 tons we're buying. We'd like to buy 15,000 tons across these. What kind of deal can you structure for us to lock in price and help us with the schedule? And that's been, frankly, that has saved a tremendous amount of money this first quarter that goes directly to the owners. So that's what we've been doing.
That's great. Those are the questions that I have for you all. I'm actually going to grab Rob and bring him back. All right. Thanks again for joining us, Rob. So I have a few questions that some of you have submitted previously, so we'll touch on those, and then I'll get to the questions in the chat. I see you actively asking questions. Rob, I'm going to direct this first one at you. We have been getting a lot of questions from owners around proof of receipt for tariffs, and even being able to provide the kilogram of aluminum steel and components. What can clients reasonably expect from construction managers or manufacturers in terms of providing proof of receipt for tariffs?
Yeah, it's a good question, but it's one that the answer is going to vary depending on what the material actually is. And I can give a couple of examples.
Sure.
We had one project that one of our trade partners had sourced steel pipe piles from Turkey, and those came into the country, and they were hit by the current 25% steel tariff.
Yep.
In that particular case, because it was just simple shipment of steel pipe piles, we were able to get our hands on the entry summary, which is a document that U.S. Customs creates for the materials when they come into the country. And it clearly lays out on that document the tariffs that are applied to the materials. So we were able to quickly assess that, yes, that was a real tariff impact. A different kind of example, we recently had a good conversation with one of our major elevator partners that we talk with all the time. And it was interesting. He kind of threw a scenario out there, and he said they've been hit with this question a lot. And he said, well, hey, there's many, many components that go into an elevator. He said he kind of painted a picture for us and said, okay, I've got a component that costs $100, but because of tariffs, it now costs $150. Well, my supply chain team quickly gets to work on that to try to find an alternate source. But let's say they find a source that's $125. So you can argue that $25 increase was a result of tariffs, but you're not going to have a document that shows that because there's not a tariff that's applied to it. So that's on the other hand where it gets kind of cloudy.
Yeah. Right. So you don't necessarily have proof. It's just supply chain adjustments in general.
Yeah. So, I think you just have to work with the supplier. You have to work with the manufacturer to understand what their particular situation is.
Got it. Chris or Sarah, any other additional comments on this topic?
Thankfully, ours is a little easier. It's just steel. And now we provide letters from the mills as backup. So it's pretty simple for us.
Great.
We haven't really seen as much of that, I think, as some other materials. We crossed that bridge a lot up front at time of bid, but we haven't seen as much of a requirement for certificate.
Great. My next question is, and I think, Chris, you might have an example here to share with us, but you alluded to it. How would you recommend that owners and builders incorporate tariff volatility into long-term project budgeting without overestimating their risk or inflating contingency unnecessarily? Do you have an example of a successful collaboration model between supplier, contractor, owner?
Yeah, absolutely. The example I touched on a minute ago, on behalf of a couple owners recently, and these are these are all data center owners that I'm mentioning. It's folks that have kind of pipelines of 6, 10, 12 buildings, whatever it may be, over 2 years, and they know with a pretty good degree of certainty when the schedules are, where they're going to go, and so they have basically read us into the program and said, how can you help us de-risk our purchasing plan for these buildings? So we in turn have gone to some of our mill partners, our joist and deck suppliers, grading, and basically showed them the same information, say, what can you offer if we can commit this volume of work to you? And the responses that we've gotten have been great. It's, without saying exact numbers, been, hey, we'll give you all the wide flange at today's published price with a little bit of a discount, and we'll hold that price through the end of the year, or maybe through first quarter next year. So any other increases we may have, you're insulated from it. So, for us to be able to take that to the owner is huge. They're taking it to their board and saying, all right, we've got a partner who's here looking out for our best interest and willing to work with us. So that's been very successful.
That's great. I'm going to turn to the chat for a second. There's two questions that are a little bit related around domestic suppliers increasing their costs because they can, and that there are little to no plans to increase steel and aluminum production in the U.S. So should we presume that increases in cost from tariffs will be permanent? Sarah, can I start with you on your thought on permanency or increasing costs because you can?
We're certainly watching it closely. We would hope not. I mean, I think as an example, right, with the first round of tariff that went in place, earlier in the year, we had seen an increase in the Midwest trading price. But if you had asked me last week, I think we were starting to see that go down. We kind of expected that to steady out for the rest of the year. Now, given the news this weekend, it's spiked back up and we don't even have a firm tariff in place yet. So it's something that we watch really closely, and we put a lot of strategy behind how long can we bear what that trading price is doing up and down before we have to make a call to actually do something around price ourselves in order to limit our exposure. But I guess in short, I certainly hope not, although, I think there will have to be, the longer that the potential impact to tariffs and increasing goes on, there are going to have to be meaningful actions around capacity. And I think with government support, because they're big investments for the aluminum industry. Yeah.
Chris, anything to add to this?
Yeah, I'm hopeful. We saw the graph that spiked during COVID, and that was, a price increase every week. And it was, the mills made a lot of money at that time. I do think, and we're having some pretty open conversations with them about, when enough is enough, because if you get a little too greedy, don't use that word, but, if you get a little too opportunistic, you can start driving designers and owners away from steel to concrete, to timber, to something else. So again, I think it's tough in some instances to see the direct correlation for a tariff to a domestically produced product that's 98% recycled material produced domestically. I think it's a little bit of, again, having pretty flat years. Maybe their operating costs went up a little bit, and this is kind of a, hey, everyone else is doing it. Maybe let's see what we can get right now as well. But I hope it doesn't go overboard, because that's bad for the industry.
Right. There's another question about mitigating in like 2 to 3 year time frames. Are there terms that we can put into contracts? I know, Chris, again, you talked about being pretty transparent with one of your customers in that capacity. Rob, is there anything else you want to add about, customers that are thinking, again, 2-3 years out?
Yeah, it's a tough one. I mean, other than the scenario that Chris kind of laid out, right? So if you've got significant volume to offer to a mill or to any other kind of manufacturer, and you can convince them to hold pricing in place, I think really that's your best bet. That's the typical approach, is to kind of trade volume for price certainty.
Yep.
Yeah. Okay, I actually don't see other questions in the chat right now, but we have a few minutes, so I'd love if maybe Sarah, Chris, and Rob, if you have final wisdom to impart on our attendees, any thoughts that they should carry with them. And Sarah, we'll start with you.
Probably just to hit back on one that we kind of talked about. It's obviously a very dynamic and volatile environment right now. So you just you got to keep the best pulse you can on what's being communicated out there. For us, we try to partner really closely with our import and export team and our government affairs team, who have an even closer pulse than what we can probably see in some of the publications. But with that in mind, we're going to, in a softening market especially, we're going to do our best to try to mitigate the impact that we can for projects, because we want to see them go forward. And I would just I would encourage, like we've been talking about, to the partnership, right, between all of the stakeholders in the value chain for delivering a project to figure out how we can make these go forward, because I think that's what we all need in a time of uncertainty still too.
Yeah. Chris?
I would echo that as well. I mean, I think there were some lessons learned for us going from a few years ago, and just the importance of timely communication over communication, because when steel prices were doubling, it's not like the fabricators' fees were doubling. They were in fact shrinking, because we bid a project and the next week the price would go up. So the more that we can protect the owner by helping protect us, the better. I mean, I think most folks, like Sarah and we're in it for the long game. So, a lot of companies are not out there trying to make a quick buck, and we're sharing the news as we receive it. It might not be the news you want to hear, but it's the best we can do right now.
Yeah. And Rob, I just saw a question, which maybe we haven't addressed fully. Are there concerns around lead times? Like, do tariffs lead to increased lead times, or what has been your perspective on that?
Not seeing that so far. Seeing any concerns with lead times. The one thing that we're kind of keeping a close eye on is, as those 145% tariffs were in place against Chinese goods, number of shipping containers that were coming into West Coast ports dropped significantly. I saw numbers in the 40 to 50% range. So now that those tariffs have been reduced, we're going to keep a close eye on what that volume of shipping containers looks like again. You'll remember back in the COVID period, there was a huge bottleneck on those West Coast ports. So we just want to keep an eye on that, and things that are coming in from overseas could be affected.
Great. Well, I want to say thank you so much to our speakers and our guests on our webinar, Sarah, Chris, and Rob. Thank you. Thank you all for those who joined our conversation today. Again, we're going to share the presentation materials and a recording. If you have any specific questions that you don't feel were addressed, or just want to connect with any of the guests or Skanska team members, please do not hesitate to reach out, and look forward to talking to you again, probably late summer. Thanks, everyone.
Thank you very much.
Everyone.